everybody, my name's Clara Hermit and this is Breaking the Mould. This week, as always, joining me is Russ Mould, our Investment Research Director. Russ, it's Valentine's Day, what's the fuss?
Clara, in the next 2 weeks, we've got a fifth of the FTSE 100 reporting, publishing numbers, trading statements, so it's going to be fast and furious, but the real fuss of the next 2 weeks, bricks, banks, bottles.
3 Bs.
3 Bs.
Should we start with bottles?
Love to. Good choice. Today, as you've rightly said, is, my glamorous assistant please, Valentine's Day. So there you go. Who said romance is dead?
Thank you.
And there'll be good catch. There'll be an awful lot of fizzy pop drunk of one kind or another tonight, preferably champers. But when it comes to non-alcoholic drinks, the company to think about is Coca Cola Hellenic Bottling. Now you're going, who are they? Well, they're actually a FTSE 100 company. Although it's listed or based in Switzerland, it's actually part of the FTSE 100 and has been so since last autumn. It's a big company, 6 billion quid of turnover, and it's Europe's biggest bottler and seller of branded Coca-Cola drinks.
That sounds really good, but why have the shares been so weak?
Good question. Now, a big chunk of its sales are Eastern Europe, particularly Russia, which is about a fifth of the business. And we all know emerging market shares, bonds and currencies have been in a right old flap with themselves for the last 2 months. That's weighed on sentiment, and the shares, as you say, have gone from the thick end of £20 to nearly 16. When it comes to the numbers, which are today, Valentine's Day, really the market will be looking at the volumes. The third quarter statement, volumes were down 3% to 575 million cases. That was enough to take sales and profits down around 5%. So the market, it might not be looking for growth, but it'll be looking for signs of a stabilisation.
Okay, well, in case that goes flat,
Bum,
what about bricks?
Bricks. Okay, Hammerson, one of the biggest commercial real estate companies in the UK. They report numbers on the 17th, Monday. It owns 20 retail shopping centres, 22 retail parks in the UK and France, including Brent Cross here in London and the Bullring in Birmingham. So when you look at the numbers coming up, there are 4 things to look at. They're all very strong at the interim stage. So again, it'll be what are the trends in these? So occupancy rate was 97.4% last time. Rental income was up 10%. The dividend was up 8% and net asset value was up 2%. So you're looking for continued growth in those. I'd expect you to get them. The boss, David Atkins, was very, very bullish at a trading statement in November, talking about improvement in the UK economy and improved retailer confidence, so fingers crossed.
Okay, so that's bottles, bricks, that just leaves banks.
Yeah, they're probably, I know what everybody's thinking, them again, but it's really, really important. We've got numbers from HSBC on Friday the 21st and Royal Bank of Scotland on Thursday the 27th. Now, RBS has already taken another set of provisions from being a bit of a naughty boy, compensation, and so on and so on. So another 3 billion quid. Now, that's going to leave them in loss for the 6th consecutive year, which obviously isn't a great track record. The secret to it's going to be what is the underlying momentum. Lloyds, for example, made £6.2 billion underlying, excluding all the provisions for misdemeanours, fines and litigation. Royal Bank of Scotland will be looking to try and show some improvement in the same underlying performance. The government will certainly want to see that. At 338p, the shares are still well below its 441p average in price, once you adjust for fees and things, and it will be looking to get short of its 80% stake at some stage, so they'll be hoping for good performance to get the shares going.
So RBS have taken a bit of a hit, but HSBC have taken a real tumble.
Yeah, and that's because, remember, it used to be Hong Kong and Shanghai Banking Corporation, so it's actually a very, very big emerging market, Asian play, and as we said at the start, that emerging market wobble has definitely weighed on HSBC's share price. They're at nearly a 12-month low. The market's looking for an earnings figure of about £15 billion for last year. Again, if anything, the good news will be no more provisions for litigation, compensation and general misdemeanours. And if that's the case, then maybe boss Stuart Gulliver's starting to clear the decks, get that under control, and we can start talking about the underlying performance again.
Okay, thank you, Russ.
Pleasure.
Wishing you all a very happy Valentine's Day. Hopefully you get everything that you dream of. We'll be back with you in 2 weeks' time for another Breaking the Mould. Until then, bye-bye.